it's Neil Irwin here, coming to you from Vancouver on the second floor at an office called Kickstart. We're going to kickstart your business off here. We're going to show you some amazing ideas that I've been using for about 30 years in financial planning. Now in private investments for about 15 years. I got out of retail and I decided to make people money, real money. So myself personally, I bought about 26 homes and sold a lot of them. I have about 5 left. And made money in real estate, made a lot of money in helping people with tax planning. The first part of that was, simple stuff like RSPs, boring. Then I decided I was kind of getting people into tax traps, so I decided to help them out of that. In about 5 years, I helped my clients get about $5 million out of their RSP without paying taxes on that. And it was a laborious process of, repairs and maintenance on rental revenue property and so on. But now I have a very, very exciting offering for all of our viewers here. It's a technology company that's a hyper growth industry, and we're going to learn all about that. But first of all, the big picture. So what people do when they get started off in life, they have these 4 buckets. They build their investments in 4 buckets. And so we call this the tax classification of assets and income. So when you have income, you have money that grows or comes in from somewhere. Either your income comes from an employee situation and you have a job, you're an employee, and maybe you have self-employment, and you get taxed on this income. And how you build your savings and assets, you get that from a job or income or business, and then eventually you get told by some financial guy or the government or whatever, the banks have you buy these tax savings accounts. Now this is called tax now. So every year you make money, you get taxed now on that income. And what we do is we learned how they can put money into these tax later accounts. And you put your money in here and you get a bit of a refund. You can use this RSP to buy a house, which is a really good strategy. As a matter of fact, first-time home buyers, they can use up to $22,000 of their RSP. Husband and wife, that's $44,000. So you can save yourself about $15,000 to $20,000 in taxes and roll that money to purchase a home. And that's why I like RSPs. So you can do what's called the HOP program. The HOP program stands for House Owner Plan. If you haven't bought a house in the last 7 years, you then also qualify to use your RSP to buy a house, and that's very cool. So another thing is when people learn about growing their money in a tax lower account, is open accounts. These open accounts you can buy. I was buying silver and gold, got in that rabbit hole, but decided and discovered there's no cash flow in silver and gold. So sold my silver and gold and bought revenue properties, cash flow properties. And there's amazing opportunity with real estate because you can buy a house for under the market value, fix it up, refinance, get your down payment back. So there's actually what we call an infinite return, which is what my logo shows, is the infinite returns of buying an investment, getting all your capital back, and then reinvesting the money that you created in other ways of magnifying your income and your assets and your net worth. So then we show people how to shift from tax lower accounts to tax never accounts. Now these tax never accounts, people know about them. There's a principal residence, tax-free status. So people can buy a house, fix it up, sell it every 2 years, and there's tax favored treatment or zero taxes on the selling of your principal residence, which is over your working lifetime a great strategy to build a net worth. A lot of people in Vancouver, they bought houses here and then they moved to Burnaby and then they sold there and then moved into Langley, and there's a migration of wealth goes from Vancouver into the lower mainland, into the inner, even as far as in Kelowna. And some people live here in beautiful properties and a great climate, but there's really no cash flow. So what they might do is live here and make their money by renting properties out in Alberta. A lot of people actually live here, but they own investment property in Alberta, and that's one of my focus points. But principal residence is what we're talking about, and that's tax-free. Then you have your tax-free savings account. Tax-free savings accounts is kind of now an opportunity, because $5,000 a year is now accumulated to where each individual, husband and wife, have a combined allowance of about $82,000 available in their tax-free savings account. So there's a corridor of opportunity there where we can help people put quite a significant amount of money and grow that money in a tax-free environment. So, and then we have this thing called the Canadian Controlled Private Corporation, and this is where in our working lifetime we can own shares of a qualified small business, a private company that has employees, Canadian run, and stimulating the Canadian economy. And this is some of the things that we are helping our clients buy into, is a Canadian controlled corporation and crystallize their now $800,000 capital gains exemption, which is a game changer. So we found a way to help people get money out of RSPs and shift it over to tax-free environment using the Canadian controlled private corporation. And that's what we're going to be talking to you about a little bit later on after this video. So thank you for tuning in to the Tax Now to Tax Never educational workshop, and we'll see you on the other side.